Hey guys, welcome back. Just wanted to make a video for today's DCTH chart. It's a pretty big day for DCTH. RS vote just ended, and a lot of people are chomping at the bit waiting to see what happens. I just want to give out a shout out actually to some DCTH folks. La Corleone family, shout out to you, bro. Mama B, Sundance, thank you for submitting all that stuff to the SEC and recording that and keeping info straight on the board. That is flipping amazing. To and through, hometown, what's up, dude? Jesse, Chubby Robot, all you guys. Seriously, so many names I could talk about, but like I don't want to waste too much time, but seriously, those are just the first ones that popped in my head. But seriously, there's so many people. Um, anyway, guys, though, I'm not going to go too deep into each of the indicators on here, but I did want to briefly touch on some of them, and I'll bring a few more up as well that were on the chart I posted. This is the second video I've done for this, by the way. My first one, my mic died in the first video, so this is about the third time I've said all of this. So pardon me if my mouth is dry and I pause to take a drink and things like that. But I did want to get this out for you guys, even though I'm having lots of technical difficulties. Okay, well, let's begin. I think that I would like to start with the stochastic. The stochastic is here. I'll make it a little bit bigger since we're talking about it. Stochastic basically measures if a stock is oversold or overbought, and it does this in between the ranges of 80 and 20. Some platforms use 70 to 30. Some people even use 90-10. It's really up to you, whatever you're comfortable with, but it was set up and generally made for 80 to 20. And what these two lines are is you have a percent %K and a percent %D line. The percent %K line is your fast quote unquote line, which is this white one here, and your percent %D line is your quote unquote slow line, and that is your red line here. Now, there's a lot of math into it, but basically what it does is over time, it measures, it's basically like the RSI. Um, so it just shows momentum basically. And when it's reaching these overbought and oversold areas, you can look for a crossing of your fast and slow lines for indications that the price is going to reverse or change. Um, but basically, yeah, it uses the bulls push the price higher during the day, of course, bears push the price lower, and it measures it at closing time. So the reason I like the stochastic on DCTH is because it measures it at closing time. Because as you guys know, most of our action is near open or close. And I'd say most of the time it's, that 5-10 minutes right before close. You guys have seen it. You've been waiting. Um, so what we can see here is the stochastic generally follows a similar shape to the stock price, just like RSI. And we can look for situations in the chart that match up with what the indicator is supposed to do. So essentially, if you look over here, this 20 line, if your lines are below 20 in the oversold territory, and you get a crossing of the fast, the white, over the slow, the red, and it's below this 20 zone, that is generally an indication that the price is about to shoot up. And let's try to find an example in DCTH itself and see if that holds true at all for this stock, right? So let's just go back into June when that other RS vote was. Here we are, we're in oversold territory, and bam, right here, slow is below the fast, fast crossed over it, and as you can see though, we had a couple of days, and then the price started reacting to this. So we got up to almost 50 on the stochastic before it started really making a noticeable change in the chart here. But that's also, you got to look back here. Look how long we were at that price, right? It was going to take a lot to move it. So we got the movement, we got the cross, bam, check one. It worked, right? And then as we approach the top, if you get, again, the fast crossing the slow, And going downward is generally a price that or generally a sign that the price is about to go down. So it wasn't quite oversold here, but you can see it crossed and then also the price started going down. But as you can see right here, same thing. It crossed, price started to go down. But since it wasn't super overbought, it didn't really dip that hard. A lot of times, I would say it needs to be pretty overbought to dip super hard just because those lines crossed. But there you go. That's another example right there. And then if we go here, we're almost oversold. Fast, cross the slow. But look, not as much of a price jump, right? If any at all, really, because it wasn't so far down below. And then check this out. Fast over slow, bam. Huge little candle right there, right? I mean, we're talking, you know, 2/3 cents up to 12 cents, right? That's almost double. So these can be really powerful. And the reason I bring that up for today's chart is we have the same thing again. Look at this. Fast over slow, and we're in oversold territory. And look at this. We're already reacting to the price change before this is even flying up. And remember back here, that cross happened and it took 3 days to notice it, right? So how much more strength and power do we have behind it already? I don't know about you, but that shows a lot to me. That's pretty much it for stochastic right now. Pardon me. And now let's talk about money flow index. What the money flow index does is it measures pretty much the average, it measures the inflow and outflow of money into a security over a specific amount of time, if you wanted to get technical about it. But it basically uses the stock's price and volume to measure trading pressure. Um, and it's generally relative to the relative strength index. Actually, you can use it almost the same. It's sometimes called the volume weighted RSI, because just of how it measures things in a similar way. But the same way, it's 0 to 100, but the oversold overbought range is 80 to 20. It uses a 14-day period. I think that's the same as RSI, if I'm not mistaken, and a lot of other indicators, 14-day period, 2 weeks. Um, and using this, basically what it does is it calculates the typical price, and then it uses the raw money flow, and then it calculates the money flow ratio by using the positive and negative money flows for the previous 14 days. And then using that money flow ratio, then you calculate the money flow index. It sounds like a lot, and it's a lot if you're doing it manually, but of course none of us do that manually. We're we're going to do it on the computer, so it's not that hard. But basically, in that calculation, you can see if there's price action possibilities usually when there's a divergence between the money flow and the price. That's generally when you're going to see changes in the price action. Um, Give me just 1 second here, guys. Um, Sorry, I had to answer a message there. Um, so yeah, as you can see here, super, almost cussed there, super tons of money flow. But look, the price was not going up. Like, what? That doesn't make sense, right? Well, bam, there you go. There's your result for it. After a while, it's got to change. If that money flow is increasing and increasing, but the price isn't going up, where's that money going? The money has to go somewhere. So as you can see here, money's down, price is down. Money flow up a little bit though, and the price didn't go up. So remember, it doesn't necessarily indicate a positive price change. It just indicates price change. So money flow is going up, but price is going down. So bam, here we go. Another drop, right? And then bam, we're following it again. Money flows up here. It's heading up, right? There you get your price jump. But check this out. We're kind of having a divergence here now because your price went up here. It went up a little bit here, went down, and it's going down. So it's not a big divergence, but to me, the price has changed more than the money flow. And as you can see here, it is a divergence at the end. The price is going up, but the money flow is going down. But like I said, divergence doesn't indicate positive or negative change, necessarily just indicates change is going to happen. Um, so there you go. That's pretty much it on money flow. It's pretty simple. I don't really know what else I can say above that, but it's not overbought, it's not oversold, and I mean you can see the trend. It's going up, and this is staying up. We have lots of money in here, right? And when there's lots of money, that's when the price is going to go up. So it seems to be lowering off, but remember, people were waiting for the RS vote and stuff. A lot of people are waiting to buy in, and a lot of people did buy in, and they're still buying in. Okay, so we've gone over, I believe, stochastic, money flow, and I just wanted to quickly also show the MACD. MACD is pretty much like stochastic. It's got a fast, it's got a slow, and it has a zero line. And basically the zero line in this is kind of like the being below the 20 in the stochastic. If you have this cross below there and it's going above, that's a very strong buy signal. But what you also need to look for in MACD is you need to look for a divergence between the fast and the slow. The bigger the gap is when it's going up, the more your price is going to go up, because MACD actually is measuring the difference between two exponential averages, and basically it's showing the same thing. If you were to put those actual averages as mapping on here on the chart, you would see them diverging in the same way. So as you can see, we have a cross here. We're below the solid line, and the divergence starts fast over slow, and that's when our price starts. See, right here, the price is changing, it's going up. And then we'll look, sharper incline, bigger divergence, bigger price increase, right? And then here we go. We got our fast crossing under slow, and that's basically, if you look, that's when it first started really decreasing hard, right there. And you'll get these little bumps along the way, but generally, it's going to follow that MACD line. You'll get little bumps like this, right? But it's generally going to follow that MACD line. MACD right here, fast, crossing over slow, going back up. Price going back up, right? And here we are again, okay? So we had the fast went up a lot, right? But it didn't go well above the zero line. So we got that peak, but we didn't really explode, right? And here we are. We went back down, and now we have a crossing of fast over slow, but we're really close to the zero line. So to me, that says, see how we had to waste, okay, look back here. See how we were so far below on these bars, right? We had to build back up. Look how little we had to build back up now for this next little peak. So it's not a guarantee, but again, we have a fast over slow cross under the zero line, and the price is already starting to react and go up to it. So to me, again, a really strong buy indicator. I don't see any reason that this would be a false positive. Um, I mean, we just traded it or checked it back through this whole time, and it's on the daily chart, so it's a pretty strong trend. I just don't see anything bad with that indicator right there. I don't know what else to say. We could go more in MACD right now, but I feel like I'm already dragging on long enough because it's pretty easy to see. Just remember, fast over slow, divergences, look for the crossings, and look at where those crossings happen. And I think one last one that we'll look at, um, just because we've looked at it before, I want you guys to see it, is just remember RSI, oversold, overbought, oversold at the bottom, overbought at the top. And one, I did notice this earlier, I wanted to show and point it out. If you look where we are now, we're at 56-ish, 55-ish, And if you go back to our peak right here, right before this big jump, guess where we were? Right around the same, right? Look at that. You can put them together right here and right here. So even though that was a little dip first before the jump, we're at about the same price. We're not oversold, we're not overbought. And remember, we already looked at our money flow, we looked at MACD, and we looked at stochastic, and those all gave us strong buy signals. And RSI is also saying, hey dog, we're not overbought, we're not oversold, we're right in the middle. Like things are great. Stock price is pretty much stable. Again, another strong indicator that it's a good time to buy. And now I wanted to just dig a little bit. We're not going to go hard in this because I feel like fibs are a little bit more, they require more time and deserve more time. But I wanted to show basically a little bit of what I was looking at when I was plotting this. Um, so essentially what we have here is we have two fib fans and then one Fibonacci, just regular Fibonacci for this whole range. Now fib fans, I set these up based on MACD, RSI, dips, peaks, and also just a little bit of eyeball, just nudging it around till it looks right. So with this first fan, well actually, I'll go ahead and delete that guy. With this first fan, we went to this bottom peak here and just followed the general trend of what it was doing. And I mean, I could actually even adjust this. These do not need to be exactly the same for everybody. You might follow it, you might look at this a little differently than I do, right? But what you can do is get where, you know, you just get, it's hard to explain. You just feel it out. You can see where peaks will touch each other right here. You'll see where the trend is right or not. I mean, like how many places does this touch, right? So you'll get the right idea the more you do it, but it's generally just follow the trend. You'll see it the more you do it. Um, so on this, you can see like, hey, we're well above trend here, and then way above trend here. But then when we fell hard, right? But look, we just landed right back on trend, and then we dipped, but look, the bottoms on trend, a little bit in between. And then when you get these dips below trend, like right here, that's going to indicate price movement up or down. Um, and don't be, don't think that just because it dipped down, it's going to go down. Dipping down could mean it's going to go up. It's just change over trend or under trend rather. Either way. Like right here, this green guy dipped well below, right? That doesn't mean it's going to go down. Look, the next day, right there. But it can give you an indication that price might change soon. Like, look, just 2 days later, way up there. But it didn't hold, right? Dipped below, and it retested what happened there, see? And it couldn't hold it. So there's when you dip back to other trend. And like I said, it's not exact. Everybody's trend lines might be different than mine. It depends on how you want to set it up. But this is a Fibonacci right here. And what the Fibonacci does is it gives you the trends, but just on a horizontal way. It's not matching an angled trend. It just gives you right here, you can see in the middle, we have our trends. So you can see this one, it doesn't really work as well, but it does hit it. It's hard to see, it's kind of faded, but it does hit it right here. And it does follow it pretty much right here. And again, that's not going to be the same. You know, I could actually, and realistically, it probably should be more like up here. But again, it's however you want to do it. There's going to be different ways you can set it up. Everybody's going to do this differently. Honestly, it probably should be in this peak. And then again, all I did was I had another fib fan. You know, I like to make it pretty colors, so it's nice to look at. You know, nothing crazy. And then again, what you do, you just click, you draw, and you try to find that trend. And then just think really, what has it been doing mostly? This, it went down hard, but then it went kind of sideways. So it's going to be a pretty negative trend. And holy crap, I think that's exactly where I'm going to put it. Awesome. Okay. And there you go. So it hella dropped, went sideways. And this is a pretty much hella drop sideways trend in my eyes. And so what you can do is see, look again, just right here. It hits here, hits here, hits here, hits here, hits here. You know what I mean? Look, hits here. You hits here on this line, or again on this trend. So the more you do this, the more your eye is just going to naturally hit and see these kind of peaks, right? And now this doesn't really help us that much though, this downward trend one, but it is nice to see just, what it's doing and hook it up. What I would like to do actually though, instead of that one is maybe a fib arc sometimes. And again, fib arc, you can just do the same thing. You're going to find that trend line. These are a little bit different though, because you're going to want to go to the base of the whatever your dip is. So I'm going to say it'd probably be more like this, because you're going to want to go to the end of your dip. And as you can see, just in a quick, and remember, I'm not super doing this right now because I'm just trying to quickly show you guys. I would be much more precise. I'd be zooming in like crazy and all this stuff, making sure it's all exact, but I just wanted you guys to get an idea. And as you can see here, again, it hits on there. It stays within right here. It stays within right here. So it hits this peak, you know? And so the thing is, you can see it's gonna follow these trends. And look at this. I mean, because that's where we started it, of course. But look, it comes down, hits on top of there. Like you'll just see things sync up and you'll know if you're doing it right when you get tons of connections like that and it just feels right. Um, I know you're not supposed to use feels in the stock market, but what can you do? And I would generally do some more stuff for outward projection. And honestly, I'm not sure I like this trend line, how it is here. I'd probably actually end up increasing it like that to give us a better idea. Go through that crossing here, right? And look at all these sitting on it, right? So it just feels a little bit better because we had this bar gripping it too, this bar gripping it right here, right? And as you can see, it dips below twice, testing, dips lower, right? But now we're jumping back up on this trend. So hopefully we can ride in this upper fan range right here. That's what I'm hoping, right? But essentially, that's all there is to fibs is just finding the trends, plotting it out, and you're going to want to do more things to it. Like a lot of times, I'll pull up a MACD and actually use MACD crossings as my point. Or you may want to use stochastics, or you may want to even, use any, there's so many ways to do it. And however you base it is going to be your outcome. So, like I said, there's probably nobody that sets it up like me. I'm really weird. I just go with my gut a lot, and it just works. But I mean, like right here, you can just see it. It just hits. It just hits. And when you see it just staying in trend like that and testing, that's when you can see is like, is it going to change soon? Yeah, you know what? That's an indication it might change soon. Maybe not today, maybe not tomorrow, but something's going to happen. And again, here, when it did below, it's probably going to change soon. And this most likely down, right? And when you see huge jumps like that, it's probably going to revert back to some sort of trend that you were on before. So on this one, I don't really want to give a prediction off this chart in particular, just because we quickly sketched it together. But you could just go through as an example, right? So hold on, let me do a vertical. So what's tomorrow? The 8th, right? So what I like to do, just draw a vertical line on the 8th, right? Then you go back in, where's some interesting points that it intersects, right? So we got here, right? We got here, 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 we even got up here, right? Now, obviously, the stock isn't going to do that. It's not going to hit all these points. Well, it might. You never know. But those, you can use that, use the history of the stock price, use your money flow, use your stochastic, use your MACD, use common sense, and kind of derive a point where the stock might go. And if I was looking at this and I saw this little thing popping up, and I had also looked at everything else we already looked at, I said like, well, hot damn, it's probably going up. And honestly, I think it is, but everybody's going to be different on what they see. I'll just draw a heart actually. I think we're probably going to be in this range tomorrow. There we go. Well, we'll probably be in there. Is that necessarily going to happen? No, we have, remember guys, like in the other videos, there's news. You have to pay attention to news, filings, events. In our case right now, the RS vote. You got to think about news articles. You need to think about, social media sentiment. You need to think about stockholder sentiment. There's so many things. So even though we're going through all this work and pulling all this up on here, remember, use everything that you have. Don't rely on one technique. I may look like I only use fibs because that's all I post, but I guarantee you that's not all I'm looking at. You gotta look at everything you can. Do not rely only on other people. Do not rely on me. Rely on yourself, rely on your studies, and keep practicing because the more you do it, it's just going to make sense. And me explaining it is going to be nearly as good as when you sit down, read it, practice it, and when it works and you really feel it work, that's when you're going to really, it's going to click and then you're just going to want to keep doing it. So just trust me, guys. Study RSI, study stochastic, study MACD, study your fibs, and use that in correlation with everything that is available to you. I mean, we have Google, we have press releases, we have platforms that tell us when news comes out, so many things. So just don't be scared to practice and try it and be wrong, but you just got to do it, you know? You just got to do it. And I guarantee all of you can do it. If I can do it, I swear anybody can do it. It's not anything crazy. It's reading some paragraphs, putting it to work, and practicing. But in any case, guys, I hope that wasn't too fuzzy. I hope some of it was informative. Ask me questions, comments, anything like that. Again, this video is by request from the DCTH family over at StockTwits. Again, you guys are awesome. Thanks so much for your support. And again, if there's anything confusing at all, I will make better videos than this. This was off the cuff. I just want to get something out for you guys today because I know you guys are really interested in what's going to happen tomorrow. And again, this is just without news or anything. This is only the chart that I think is going to be in the zone, between like, 1613-ish, maybe down to 1413. Most likely, honestly though, we're probably going to get a little dip to like 1250 in the morning. But again, use your own charts, use what you know, practice what you know, and practice what you don't know. Because if you never practice and try, then you're always going to be chasing and you're always going to be relying on somebody else. All right, guys, you can do it, but just keep at it. We'll all make it pretty good. I really feel like DCTH is about to turn a corner, and again, this one is for you guys. So much love, take it easy, and see you guys on the boards tomorrow.